So we have a new COVID strain, and it's spooked the markets, hasn't it? Hi, it's Charlie giving you Saturday's video, and I hope you're very well. It's typical. Both Kim and I were both out at a trade show yesterday, and then we get all this volatility. It's absolutely typical, isn't it? Not that I would have. No, by the time if you don't get out of bed until 7 o'clock in the morning, then it's tougher to possibly find an entry on some of these sorts of moves. But anyway, what we're going to do, have a look through the markets here. I don't need to tell you any of the general news regarding this latest strain that's of concern, but let's have a look and see how the markets have reacted, and really, is there anything you can do going into next week and anything to look out for? Okay, so the first thing I think is that what's been building on the S&P here, this is the S&P futures, on the Nasdaq futures as well, has been this weekly divergence that's been building for some time here, where we can see prices been making new highs, and yet my MACD indicator down here has not been confirming that. So it doesn't necessarily guarantee that a market's going to come down, of course, but it's something to be aware of if price action then starts to fall into place in line with that. And what we've actually had just at the end of the close of last week is a key reversal candle. That's where you make, and this is on a weekly bar, where we've made a new high and then closed at new lows, and that's there on the Nasdaq there, and it's also there on the weekly chart of the S&P as well. New high, closed below the low of the previous week's lows. So we have got those key reversals. I must point out, though, we have had previous key reversals. I think there was one back on this week as well. It did follow through for a little bit, but nothing too major. And then, as we know, the markets went up again. However, there's always going to be that time when they do follow through some more. So I think depending on this new strain and obviously the pharmaceutical companies are rushing to see if they can come up with something that can combat this latest strain, which seems to be a bit more potent. And so I guess that will play a big impact on how the markets continue to react. But from a purely technical perspective, I think we have to acknowledge something like a key reversal week. We have had a bit of a breakdown in breadth in recent weeks as well, where the number of independent component stocks within these indices have been trading below their 200-day moving averages when the indices were well above. Obviously, that's changed a bit now because the index, the S&P is still well above its 200-day moving average, but a number of stocks within the New York Stock Exchange have been trading below. So you get that sort of divergence between a number of component stocks doing one thing even when the indices are actually looking quite reasonable. So anyway, so from a stock market perspective, with key reversals in the background on the weekly charts, certainly the near-term line of direction with the sort of sell-off we get now. Bear in mind, you do get these panic sell-offs, and then the market then turns around, goes back up again. But certainly from a technical perspective, I could certainly argue that there could be some more downside. Okay, I'm not saying that necessarily on Monday. I don't know yet. We don't know yet. We could get a little bounce, a little bit of a relief bounce. I see Bitcoin's bouncing as I'm recording this today on Saturday morning. So we could get a little bit of a bounce, but technically, we know that the stock markets have had a fantastic run. We know that there's a cocktail of events that have been going on, what with rising inflation expectation or rising inflation and rising inflations of central bank tightening. Now, that's another component that went on yesterday, was that there was a big sell-off in 10-year bonds. And so bond yields, as people were buying bonds as they were coming out of stocks. So yields plummeted yesterday, and that in turn affected the dollar. So quite often when the stock markets are selling off, the dollar itself, so if we go to the dollar index now, the dollar itself would actually accelerate to the upside. But that's not what happened yesterday, because we've had this, as I said, we've been seeing bond yields have been going higher. If I bring the yields up, bond That's not bond yield. That's not yields. That's the Nasdaq. That's where are we? Where's my? There they are. Da, 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 da. There we go. So the bond yields had a big sell-off yesterday, about 9% sell-off there in a single day. So, but anyway, they do move around quite a bit anyway. But so that was a factor at play with regards to the dollar. So does this mean that we're going to be seeing a major dollar reversal now as well? So firstly, coming back to the stock markets, I think that the path of least resistance, well, I don't want to say in the short term, on the back of those technical aspects there of a key reversal, I would argue from a technical perspective is to the short side at the moment in the short term. We'll move back to the dollar, but obviously another big mover yesterday was oil. Huge down day. It's nice to see some of our traders had caught this. One of our traders did something like 32R. 32. So that's risking one to make 32. And he closed out last night as well. So I believe. So he put on our app. So I mean that's the sort of trade of the year stuff. And he said, well, just use Charlie's strategy for that. And the you only need one trade like that once a year, and that can sort of make your year. And so these big risk reward ratio trades, it's lovely to see some of our traders doing that, going for that sort of trade at times. You can't get it all the time, and of course, there's obviously an element of just fortuity of what happened there yesterday, but for it to have all happened in one day, otherwise he might have normally been waiting for several weeks before that went down there. But either way, anyway, a big move down there for oil, so at least it means that petrol prices are going to be coming down now, doesn't it? So let's go and have a look at the weekly chart of oil, because on the weekly chart of oil there's also been this building divergence here, whereby price has been going higher and the MACD indicator has not been confirming that, and it's been coming off for the last few weeks anyway, just gradually, and then obviously it's accelerated into yesterday. So, but looking at it technically, it's coming into my 50-week moving average here, and so it is coming into some moving average support in the near term. So for me, if I was looking to trade oil, I'd be saying it's too late. If you really wanted to be trading oil, how are you going to trade that on the short side now? Where are you going to place your stop? So I think it's an interesting market, of course, because that huge move there yesterday. But I think that one is done. If you're not already on the train, there were some opportunities here, but you've probably missed out a little bit there. Now, what's interesting is also is that dollar index. So if we go to the dollar, so the dollar had that pullback yesterday. Like I said, normally the dollar, when you get a stock market sell-off, you're more inclined to see a money going into the dollar as a safer haven. The dollar, the yen, Swiss franc. Generally speaking, not always, not all of the time, but more often than not. But like I said, money went into bonds yesterday, which forced down bond yields, which had been rising quite a lot on those expectations. Expectations now have all of a sudden been put back with regards to the Federal Reserve and when they might first hike interest rates. So, but the markets are flippant, aren't they? So, yes, we've had a pullback, but that's pretty much all been done in the euro dollar. Now, the euro dollar represents around about 60% of the dollar index as a basket. So it represents about 60% of all the currencies is actually the euro. And so, and hence why we've seen a big move up in the euro dollar. But the euro dollar's had a big old run down. Overall, it's been weaker than some of the other major currencies against the dollar. But what I think is interesting here is, yes, the euro's had a nice big up day there. But if you look at the pound dollar, really marginal. And if you look at the Aussie dollar and the Kiwi, now I know they're more linked to risk as well, and they've just sold off here, and both the Aussie and the Kiwi both sold off yesterday. So as it currently stands, although the dollar index came off, that's because of that weighting of the euro. I think it's one to be wary of, okay, how much upside are we going to have in this euro if those other currencies don't turn around? So if those other currencies remain weak, then it's more likely at some point the euro will then roll back over and play catch up with those. So those are my general thoughts at the moment. In the near term, the stock markets, I think you have to go with downside there in the stock markets generally. It's a very weak, it's a proper sell-off there. So certainly in the near term, bit more downside. I'm not like an uber bear, not to say that you don't know what's going to happen yet with regards to this new strain and how it's combated and whether it spreads dramatically. So that's what the market doesn't like. It doesn't like uncertainty. But certainly from a technical perspective, that looks like a bit more downside, at least in the near term on that one. The currencies generally against the dollar. As you can see, some of the major currencies are still struggling against the dollar there, and I'd still say that of course they're going to bounce at some point. You look at that New Zealand dollar there; it's had a pretty severe sell-off over the last few weeks now, and at some point there will be a turn. Now, bear in mind, I think it's New Zealand Central Bank coming up soon. So we'll have to see what happens there. But overall, the dollar against those majors is still pushing hard at the moment. But let's see, do we get a bounce in these other major currencies against the dollar? And then what we'll also see then is a continuation of this bounce that the euro received yesterday. And then the euro, see my trend channel here, could then be working its way further up into this channel and maybe towards the upper trend channel line. If not, and we still see continued weakness in those other currencies, then we could see the euro dollar then rolling back over. And if it is going to roll over, then I've got there's levels down there in the low 111s. It could easily get down into the low 111s if that scenario played out as well. So lots going on there. I think oil's a tough one. Gold is again, we saw not surprising to see gold benefit from the fear initially, but again, when people are selling everything, when people start selling and panic selling, they sell everything, and so you always have to be aware of that. Certainly in the initially, if they're selling their stocks because the stocks are going down so much, but they were in maybe a profitable gold position that they've been holding for months and months or years, then they might start selling those as well. So hence why we saw a bit of strength early on, but then sold off into the close. So tough read at the moment for gold because it's sitting in some support at the moment. And certainly when you see a bit of fear, you would normally expect gold to go up, but you just have to be a bit wary that, okay, whilst that fear's there, gold can participate because people start selling a bit of everything. But this is what we wanted as a trader. We love a bit of volatility. Makes it all fun. Plenty to talk about. Stay safe next week. Use stop losses. Make sure you position size correctly and manage your risk. Take care for now. I'll see you next week.